Okay, everyone, and welcome to another quick take video. Today is 17th of January 2021, and we are looking at Monash IVF. So IVF is so this particular company provide IVF services to the general public. For those who can afford it. IVF stands for in vitro fertilization. Basically, it helps women who can't naturally to get pregnant and have a baby. So this is the company we are looking at. So let's have a quick look firstly at the ratios. Cool. So ratio, we can see PE is 15.95. That's fantastic. Well, you know, if you're looking at depending on how you define it, but it's there's many ways to look at PE, and I'm trying to look at the PEs like a lower PE is better. Not always the low is better. But 15 is in the range where I would say, hey, that's pretty cool. I'm pretty happy with that. All right, next things up, quick ratio. Current ratio looks like it doesn't have a lot of money, so let's keep that in mind. Cool. Let's move on to the cash flow statement. Now, cash flow. I think it has dividends, so I usually check dividends on ASX and said 2.87%. I mean, that's not great, but better than leaving your money in a savings account. It's 100% franking also, so you may get some franking credit back. So that's always a good thing. Cool. This is the chart. We'll have a look at that later. So from the look of the cash from operating activities, it's not a star performer. So let's keep that in mind. So it's investing in stuff, which is always a good sign. Hopefully, like whatever it invests in, it will there will be some ROI for it. Financing activity. Okay, so it looks like it raised some capital through issuance of stock. So it's probably planning something. Raising capital is they need the cash to do something. And it's paying back debt. I hope it's not raising capital is to pay back debt. Yeah, you wonder. Anyway, so net change in cash is $10 million. I wonder why. There's certain things. Operating activities hasn't gone up. Just raise some more capital and pay back some debt. So this, it looks like, hey, you got some cash in the bank. It's like, yeah, but how did it get its cash? Preferably you want this cash coming from operating activity. It's just mean like, hey, its operations getting much better. A lot of people are using its services, and it's growing through within its market or to other market. So that's something that you want to look out for. Just because there's a positive net change in cash doesn't mean like, oh, fantastic, anything. It just means they just have cash in the bank, but where that cash comes from is very important. All right, let's have a look at the balance sheet. Let's have a look. Cool. So current assets gone up, cash gone up. Ooh, looks good, doesn't it? Cool. Other assets, so property, plant, equipment. So let's have a look. Goodwill. Okay, so goodwill hasn't really changed, and goodwill is kind of like the what is it? You can look at it as reputation. Like, how much does its reputation cost? Like, I think Coca-Cola, like most of its valuation or most of its assets is from its goodwill. Like, its reputation. Like, everyone knows the brand Coca-Cola. Current liabilities has gone up, so something to consider. Like, okay, and total liabilities gone down. Long-term debt gone down. It's always a good sign. Total equity. Anyway, so let's see, cash 13 and current liability is, yeah, see, that's why it has that less than 1. So 30, divided by 37.86, you have something less than 1. Let's break out the calculator and let's have a look. So 30 divided 37. 30 divided by 37. Yeah, there you go. 0.81. That's why the quick ratio or the current ratio is around that figure. Basically, it doesn't really have enough cash to last 1 year because current liabilities is the next 12 months what they have to pay back to creditors and banks and stuff like that. All right, let's have a look at the income statement. Okay, income statement. Ooh, very flat. Total revenue is very flat. In fact, it's kind of gone down a little bit, which is expected. Like, if you're in the business of helping people get pregnant, the year where there's a pandemic and economic uncertainties and all of that, I don't think you're gonna have a very short-term lucrative future. You think about if people are losing jobs, they're not gonna be having a baby is not going to be the first thing on their list. They're got to have to provide. They're going to make sure they can eat. It's like, and if they're planning ahead, they're going to have to make sure that they have money to actually feed and educate their children. So it's just not something I can, I just don't see the short-term future of MVF. Is having, a lot of is very profitable just because of those things. And needless to say, IVF is quite expensive, and those people who can afford IVF most likely are living in a developed country like Australia. Okay, so that's one thing. And here's the thing about developed countries: as the country become more developed, and more equal rights, and women and men are at the same level of education, and women, I believe, data show as women become more educated, they're more likely to delay having kids because they would like to progress with their career, which is a great thing. But as they progress with their career, they delay having a baby, they actually decreases their chance of actually conceive a baby, because women biologically, they have kind of like a timer, like a biological timer, where after a certain age, the quality of the eggs are not as good as if they were younger, and it's harder for them to conceive, and higher chance of the pregnancy going wrong. So which could also be an opportunity for companies like MVF, where for women who it's very hard for them to conceive, now they have the technology to help them to conceive is available. They could more likely to kind of approach and use these kind of services. But at least at the very short term, with the pandemic and economic uncertainties, I just don't see people running to MVF on the door asking to have IVF. That's my take on it. Love to hear what other people think about this particular industry. All right, so that's a broader market, broader industry kind of discussion. Let's move on. Let's turn our attention back to the income statement. Operating expenses stay the same. That's gone down. So let's look at the net income dropped. Okay. Oh, excuse me. I didn't mean to do that to your ears. Sorry. Sometimes I have to breathe. Okay. So yeah, that not looking good. So if it's something that I'm gonna be, if I really want to invest in this, I probably won't do like investment. I'm probably more like a trade, get out quickly. Yeah. Anyways, All right, so let's move to the chart. So let's have a look through the daily chart first. All right, yes, as expected. You can see this, it's gone down, and share price gone down since it's kind of, what's that, 2018, gone down, and as the price dropped dramatically there. July, not sure what happened, probably because earnings is down. It just doesn't have a good future from what I can see, at least in the short term. Who knows? It's very hard to know what one person think, let alone to know what a million individuals think. Anyways, cool. So, all right. So what this kind of show me from having a look at the financials and stuff, if I'm going to be doing anything with this particular company, it's going to be just trading. I just don't see a future for it, like a bright future for it, at least in the short to medium term. Long term, possibly, but okay, MACD crossed the line. Maybe it's bounced back up. We don't know. All right, so let's talk about how we can maybe if there is an opportunity to trade this particular company, and how are we gonna be doing that. So the plan going forward, if we are trading this company. Cool. So we have a very long, stagnant kind of chart here. All right, you know what? I am going to bring up my snipping tool so I can actually draw on it. Cool. So this is our daily chart. Right, we have a spike up at this in volume at this point here. So there's a big drop. So this is institutional selling. You don't get that big volume for no reason. So you wonder why it sold a whole chunk. And then now you have a higher than average is buying again, most likely another institution. So I'm gonna denote that with an I, and I'll do an I here. Ooh, straight line. Okay, so now it has this very flat, long-winded kind of and very narrow close and opens and close. So you see a lot of these are very narrow. Well, this what William O'Neill called the saucer, and it's actually it's a saucer. It's not a cup. This is very long, and so for a cup is a little bit shorter than this. So this is a saucer, and it's kind of having a handle here, and and this is what he kind of say, there's opportunity for upside. The reason is why you don't want a V shape and you want kind of like a U shape is that because this prolonged like flat period basically move all the traders out of here. Okay, so that will get rid of. So then you don't have like you want some of these companies to be out of the public eyes, because again, we're going back to the front page test. I probably talked about it in a couple of videos. If it's in news, you're too late. So you want this kind of long flat shape in some of the company in the formation. So then you kind of like, right, it's pretty boring. So not a lot of people will look at it, but when they do look at it, like this particular signal here, you can say like, right, maybe it's time for it to move again, and which is great, because you want to catch it before it like shoot off into the sky, and that's how you make the money. We won't worry about this. This is all dead. In fact, no, actually, no. It is a little bit important because you do need some kind of catalyst. So you kind of wonder why this particular point about this particular volume is so much higher than the other volume. Why this particular point? Are we expecting an announcement? Maybe it's gone up like this. Who knows? And usually individual traders don't know these things. Only like the big institutional players who got connections within the company. It's like, oh, legally you're not allowed to insiders trading. So, but they all talk to each other. No, we're not idiots here. Cool. So the handle is also looking good. So it had very tight closes. So tight is when the high, the low are very close together, or very unremarkable, or even like what I think this is called a doji star. Okay, so a doji star. Oh, I think I'm gonna invest in a tablet. Actually, I do have one. Next time I use the tablet so I can write faster. Anyways, yeah, these tight closes, which is again, is staying out of the news, which is again a good thing. So, but a few signal is missing for me. One is it's yet to make another move where you can say, right, this is so usually historically, when it starts to shoot up, there should be another around the signal to buy is a price change, right? An upward price change with a big volume. At the moment, it's missing that. It does have a dry out. Basically, it's just the volume just gets smaller and smaller, and then one big spike, and then it just go up. So we're missing that at the moment. We haven't got that. Now the MACD is telling me not to buy yet. I'm probably looking for a crossover, and possibly the crossover will happen at the same time as the volume. So we have to look for or wait for that. So what is that? Let's have a look at the weekly chart, and then we'll put a Fibonacci on it. And so the weekly chart kind of say, here's the buy point, gone up, fantastic. That's a pretty good buy point. It's okay. It's gone down. If you're trading and if you have a tight stop loss like me, like 2 to 3%, you're gonna be kicked out before this happens. And it's not the crossover is not very reliable. You can see there, buy point, no, buy, no, buy, nope, not really. So here buy, but it just, look at that. It's, even if that this big, but that's a big, what's this one? Yeah, that's a big volume up, but it just doesn't really do anything. So MACD is not very reliable for this particular company. And if anyone has the answer why, that would be great. All I know is I kind of treat each MACD to their own situation rather than like universally say, oh, this is a buy point and stuff like that. Cool. Again, on the weekly chart, you can see the saucer and the handle. On the weekly chart, the price, it's not as tight, the price. This particular one, you want consecutive tight prices. So, you got 2 good tight weeks and 1 very broad week and 1 tight week. So it's not consecutive. It does have that saucer and formation, and it does close above the 10 weeks moving average, which is another sign that William O'Neill talked about. Basically, all right, here's the plan. I've been chattering on a little bit too much. All right, let's quickly draw the Fibonacci. Whoa, I'm just looking at the volume. Look at the Fibonacci. Okay, let's go to daily, and let's move this smaller. Let's go from here to here, yeah? Okay. Okay, so the Fibonacci, can I do that? Oh, cool. I love TradingView. TradingView is the best. If anyone hasn't used TradingView before, I recommend you should definitely use it. All right, so from what I can see here, it's already kind of done its retracement, and it's hit the resistance here. It's gone back down, so it's possibly on its way back up to test the resistance again. And there's a doji star. Doji star is like simply, if you want to look at it simplistically, doji star could be like a signal of a turning point. Not all the time, just keep in mind. Okay, so trading opportunity, I think there is. I'm just missing a signal. So I will put this on one under tight observation, and just look for that big increase in volume. If I see that, I actually will go in. And again, I'll probably do the trade for my $1,000 challenge, and I'll probably put $1,000 or all the cash I have in the $1,000 challenge and see how it goes. Again, I will put my stop loss around 2 to 3%. I want a tight stop loss. Not necessarily. You want to be a little bit flexible. So maybe, I think 3 to 5 is a good one. If you go too wide, then you might lose too much money, and then you don't survive. That money won't survive for enough trades. So plan. Oh man, this one is a lot of ranting. It's a little bit boring. Anyways, waiting for a signal, and comes in with $1,000. And stop loss has 3 to 5%, and take profit around 7%. 7%, it's like $70, and then $10 out of it. The point is that we get richer at a predictable rate, not like suddenly bam, become a millionaire, and then bam, not a millionaire again. So cool. Right, long video, I think. I don't know how long I've been recording this one for. Definitely more than 20 minutes. Cool. Anyways, if you guys like what you see or what I do, please give a like, comment, subscribe, share this video to people who friends, family, or that you want to get into trading with. It's always good to talk with someone, one or two. You don't need to talk with too many people, otherwise you have that mixed opinion, and you can't be decisive. And anyways, the point is, if you like this video, click like and subscribe. If you have anything you want to add to this particular commentary or analysis, type in the comment. Please do not spam me. Bots have been spamming my CSL video, which is very unpleasant because I just like, hey, look, it's very disappointing actually, because like, hey, look, I got a whole bunch of comments, and it's like, oh, fantastic. So people actually start watching my videos, and suddenly it's just a bunch of bloody bots, Oh, actually, maybe I'll pull up. Okay. Anyways, I can't find it. Anyways, the point is that have a good one.